TGIF Warriors, which to me means thank God I'm fortunate.
Hey, Dale,
Yeah,
Dale, Dale.
yeah,
Happy Friday.
okay.
Hey, I just want to say before you start, great job on the sterling. Pound is trading at channel support and is dropped like a rock since you talked about it this week. Good job.
Oh, thanks, Blake.
Yeah.
So,
Hey, I wanted to jump in before you start, Dale, as well. Can you put it on your cable chart? I need you to do me a favour. Right, and on the little drawings thing, go to the crosshairs in that top corner, just below the icon, on the left-hand side, where you choose your crosshairs. Top one, top one.
oh, I'm not sure what you want
Keep
me to
going left,
do.
up, there. Yeah, left, 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 left,
Oh, there.
left.
Oh,
Click that.
yeah, okay.
Click the magic wand.
Okay.
Go,
Feel
go
like
and put
I'm,
it where you said sell cable, just next to it.
oh, all right. I didn't sell the top. Oh, look at
There we
that.
go.
Oh, God. I feel like I'm on Romper Room. Anyway, pounded. Thank you guys. And
Good job, buddy.
Great trade.
and Apple annihilated. So, like, Kramer says there's a bull market somewhere. There's always a bull market somewhere. There's always a bear market somewhere too. So that's it. Dixie looks good, right? Held where it had to. And maybe the S&P's peak out here. They're bragging it's the best week in a long time. I don't know if we'll take this out, but when you look at NASDAQ on the daily, look how long it's been diverging. And this last high we made yesterday, pretty weak reading. Oh, if I press it again. Oh, now I have a new hobby.
Yeah, you're not going to take it off now.
Now you can't. Now you can't stop yourself. And Ryan, you gave Dale a new toy.
I think you know what? It'll work even better with my bong. So, so anyway, that's it. Silver kind of gave up the ghost a little bit yesterday. This didn't confirm at the new high, so the double tops there. I think we can go here.
Hey Dale,
Yeah.
You were talking about silver and all week about it, kind of struggling up here, but it's carving out a lower high, and that's kind of a big deal considering what gold's done, don't you think?
Yeah. Oh yeah. I mean that until yesterday, because the gold silver ratio roared back pretty good with the dollar. In fact, something I've noticed, gold silver ratio at times correlates pretty tightly with the dollar. When it's going up, that means silver's underperforming gold. So just, something I've noticed. They disconnect like everything, but they do work. Kind of looks a little bit like the dollar. A little bit. But Gartley Patterns back on, Blake.
So Kurt asks, is the dollar going to scream? I have to, I know I say this like probably like every other day or whatever. But sure, the dollar does look good, considering where stocks are at. And I mean, if the stock market gets one little, whiff of risk aversion, which obviously has not been the case as of late, if we do that, you're probably going to see the dollar firm up at least. A lot of people seem to believe that if stocks go down immediately, the dollar will catch a bid, and that's not necessarily the case, because you might see the dollar strengthen against the Aussie and the Kiwi, and maybe against the Canadian or something like that. But the dollar will lose steam against the dollar yen, and then you'll see the euro and the sterling stabilize, because then you get the euro crosses and sterling crosses start to move. So the dollar
moved
does
up
look
with the market the whole year. So
yeah,
here,
that's the thing, is it's held up really well. And yeah, you could probably, point your finger at rates and yields, and then,
nothing bounces
US
off of it.
exceptionalism. But overall, I mean, if I was short the dollar and stocks started to started to weaken, I would probably be pretty nervous. And but that's not going to be, that's not the reason just to run out and start buying the dollar just yet. I think the dollar looks good against certain currencies. You point out, you look at the Aussie and you look at the Kiwi. I mean, you saw what the jobs report was in Australia this week. We're back at 65 cents. I mean, what happens if we break 65 cents in the
Down
Aussie?
here
Yeah, I
towards
mean,
63.
how many
Hold
people
on.
bought the Aussie dollar
Down
because they
down
beat
there.
expectation? Oh, hey, look at that.
Yeah, shouldn't have
Gosh,
done that, guys.
Ryan, you should be banned from today's show. Actually, from the whole
Right.
next week for
It's a
giving Dale this
Friday.
new toy.
Now I can have a little play on a Friday.
Now I'm gonna go play with it. I'm doing it.
All right, I
All
like
right.
it. I'm gonna use it. All right, thanks, guys. I only painted with Venus Paradise coloring sets where you would paint by numbers. So, that's pretty good artwork. All right, so maybe the stellar rally, it's just a blow off move, and it's done by, dare I say it, the eclipse on the 9th.
Oh, jeez. And he's going to be looking
You
for
got
UFO patterns this evening while he's smoking his bong, is what's
yeah.
happening.
Well, there's an eclipse on the 9th, I think. Yeah, 8th or 9th.
I'm
They're having
so
parties all over the country. I don't know why they're making such a big deal out of this eclipse. They usually don't, but I mean, people are flying to certain locations, and I guess people need something to believe.
All they need is
Anyway,
a little magic wand on a charting
yeah,
system.
yeah. So where do we go from here? Pound's not that far from that 61.8. That's where I think it's going. What's that? 364. And I have this speed line down here too. That wouldn't take long for it to accomplish.
well. I'm gonna step away and let Ryan and Kman join in these conversations. But I do want to say this, that the Euro Sterling looks kind of punchy today. So
Yeah, yeah, it does. It's trying. Well, look at that. You have a
Yep.
50-day right there.
Right up in
Right
that
at,
zone, 86.20.
yeah,
And
that's
you're moving
that's a
averages bang in the
200.
middle.
Yeah,
Yeah.
yeah,
It looks a bit like a leg stretch. That we always say it, the cable moves more than euro dollar when you get these moments.
yeah,
There's probably a bit of Bailey behind it as well. He was a bit more confident on moving towards cuts than the statement projected when he did his press rounds after the meeting yesterday. So
yeah.
no surprise to see euro sterling up here. Is it a ball breaking move? Are we going up to 88? I doubt it.
Yeah.
So it's probably a bit of as I say, just a bit of a wandering around.
Because they both at different if euro goes 78.6 here, that's
Yeah,
105.90. That's what 130 from here.
yeah, something like that.
So, no, 230. Okay, and pound gets to that 61.8, which means pound is still showing relative strength, right? Because if it holds 61.8 while this goes 78.6, I don't think there's any big gains because there aren't. It's not a big differential with the
Yeah,
amount of downside, right?
yeah.
Yeah,
And the euros on its big level. Cable's big level here is 125.5, bigger at 125. Euro dollar's got a big level
yeah,
here at 108,
108.
107.90.
Yeah,
So
here
it's
I
had a
thought it was
test and
gonna.
bounced.
Yeah, I thought we were vulnerable here before this. So yeah, it's knocking on the door too many times, Ryan, for that to be a level that gives it a lift.
Yeah, could be a
my
case.
opinion.
But we've had one knock today with a what, oh 08 low, oh 07 low, oh
Yeah.
08 low. So yeah,
Yeah.
one knock. It
Yeah.
might feel that that's a move to. I'm not sure the dollar goes, gangbusters from here. We've come through a real heavy week of central banks. All the banks, pretty much nailing their colours to the mast, if not cutting. Banksico cut, SMB cut, BOE, Bailey talking about cuts. The only one who's only got his colours and a nail and a hammer in his hand is Powell. He's not willing to nail it to the mast yet, and that's probably why we're seeing a bit of dollar strength again today.
What do you think of yields here?
Again, fallout. Dollars up, but yields are down. That tells its own story. Does that say the story because Powell's keeping 3 rate cuts in play? The market's going, well, let's lock in some yield then. He's not going to move to 2 cuts. He's not going to be a bit more hawkish. So we'll lock in those yields because rates are going to be cut 3 times. So park up the money again. Stocks are not doing much at all. So there's no worries there. So yeah, I think the market's just taken a couple of days to make its ideas known and where it wants to park the money up. There's a hell of a lot of options expiring today. It's been quiet all week, even over the BOJ, the FOMC. It's been fairly quiet, but today there's tons of options expiring. So again, it points to the fact that traders were hedging positioning after all the events rather than during it.
When you've seen charts like this, I know it's stock indexes where, it's a perpetual grind up, but, no real huge range days, every once in a while something. But one good down day is going to change the picture. Just one big down day is going to change the picture. So just be alert, who knows what the catalyst could be. But I've seen these grinding moves before, and it doesn't take much for one day to change the whole picture of what's been happening for months. So just a little history there.
That's why fibs are important, aren't they?
Yeah.
Because you can have a big down day from here down to the 38.2.
Yeah,
that'll be a huge move. But if it holds a 38.2, you'll look at it and go, well, that's a decent refresh of the trend.
Yeah. Yeah. Even back to the breakout, huh?
Yep.
48. I mean, I don't think that's out, outside the cards, 5,048. And then it goes to, 6,000. Maybe the dollar rallies over, yields really start dropping, and, dollar starts declining, and you have to be long the world if that happens.
But,
right?
but if it's dipping to that 4,800 or that fib, all the bears are going to be out. This is it. This is the end.
Yeah.
And the dip buyers will go, thank you very much. You're all short. 4,800. We're going to smack you at the park now.
Yeah, I don't think this can be the top because there's too many things confirming up here. But there could be a sharp break just to scare the poop out of everybody, and then we go to 48 from 52. That would give us 56 next time, or at least one more new high. But anyway, look at this. The divergence goes back to mid-December. Now, if you played the divergence, you wouldn't have played it here, but you could have started playing it here. You got massacred. Okay, unless you found a relative weakness stock like Boeing or Tesla or Apple. Okay, so that relative strength is still important in everything. So to make money being short in this market is not an easy feat. So you have to really be selective. It's like American Idol, right? You see people come on and they choose the wrong song, so their performance is off. And with us, it's trade selection. It's everything's trade selection. So, defining what your leaders and laggards are an important part of doing that. So, okay, that's the end of my homily today, Blake.
All right, buddy. Well, hey, so let's point out, since you've been talking about equities, we've and you guys, I don't think we need to beat a dead horse here as far as, you know, we are at highs, and something I told, well, I'll just kind of, I'll just show it to you guys. Just, you know, this is the ForexAnalytix chat room. This is just some commentary that I wrote. And then we have, you know, Ryan and Kman, and, you know, there's a lot of, you know, we always chat back and forth, and you can see this. I'm going to just read it to you. You know, for those of you who are itching to short the stock market, just remember it is okay not to be the hero and top tick the market. Just wait for some lower lows to be formed, then some lower highs. If we correct 5 or 10%, there's a lot of downside from here. If this is the top, there's a shit ton of downside from here. But we continue to grind higher and hit higher highs.
Word. Yeah.
Yeah, higher highs and higher lows. And same goes with the dollar yen. We are a few stops from 152 as well. And as much as my euro, Canadian, and Swiss yen would love for the dollar yen to trade back to 148, fact of the matter is it isn't. That's the reason why I haven't pressed shorts minus the Swiss yen. Patience, and it's Friday too. And then, you know, Ryan mentioned that, you know, he goes on to talk, and these are, you know, conversations that we have inside of the ForexAnalytix community when
that's where you learn.
Yeah, I mean, people get, you know, super excited, and this, believe me, this is not the first time over the last couple months we've had this, you know, do I short here? You know, how much further can the markets go? All I will say is that you know, S&P continues to grind higher. I mean, look at the chart. I mean, I'm just gonna lay out this channel on a 4-hour chart. You know, we go from, you know, one channel to the next channel to the next channel. Yes, could we pull back today to 5,200? That's 40 points away from here. Sure. Yeah. Are we still going to create higher highs and higher lows if we stop there and start going up again? Yes. So could we get some Friday profit taking? Perhaps. But if you know, I remember having this conversation with a personal friend of mine last Friday. Last Friday, let me just make sure I know exactly where last Friday was. Last Friday was here. Wait, this is Monday. This is Friday. So right here was last Friday. I was having a conversation via text with one of my friends, and he's like, I'm getting short. And I'm like, okay, you know, have fun. You know, I said, just, you know, be careful. And, you know, I don't know if I'd stay short over the weekend, kind of thing. This is Friday. The market sold off on Friday. This is Friday. We could sell off today, but look at what happened the next week. We just pushed to new highs. I mean, until we start breaking this pattern of higher highs and higher lows, you just kind of got to respect what the hell's going on. But there are some risks. And by the way, Nick, Grasshopper Nick, are you here? I know he's coming in today. He's not here yet. Okay, so
and Blake,
I think he's,
you know, for the viewers, aren't your best, and Ryan and Kay, aren't your best trades laid out on the weekends when the markets are closed? That you already know quite a few things that you would do if the market got to certain levels, so you're prepped and you're not analyzing on the fly. You're executing at that point of time. So do you guys do? I know you do, Blake. You do the week ahead, so
yeah, I actually put out, you know, 3 best trade setups of the week in my week ahead video, and so I think everybody should be plotting and planning what they're doing. Yeah,
they don't. They're
I'm the opposite. I'm doing everything I can to forget trading on a weekend.
All right, that's okay too. I don't know how to do that, but
pints of beer will do that.
You need that switch off. You need that switch off. Clear your brain, otherwise you can get too foggy in the, you know, the everyday.
Oh gosh, yeah.
So yeah, you need that.
It's like I live in London.
Kman, how much planning do you do over the weekend? Do you do?
Well, I'm planning 24 hours a day, my friend. No,
wow.
No, come on. No, I do planning, but but I look at stuff the whole day through, you know. But I do plan certain things, over the weekend. I sometimes do. But I'm not in front of, not specifically in front of my charts, or but I'm reading stuff. I'm reading quite a bit of things. There's actually something funky going on right now. Dollar yen lost 50 points in a quick move
Yeah.
there over the since actually just before the show.
Yeah, it's
Oh.
starting to look a little wobbly. Can real quick, let me just point out a couple of key levels. This, if you guys are FX centric, you need to see this real quick, and then I'm gonna let Ryan and Kman formulate some thoughts as we wrap up the week. Dale, you know, think about things that you want to for our traders to hear as we go into the end of the week. Let me just point out a couple of things. Euro, we're at the 618 retracement of this entire move and the 127% extension of this move. We call that a confluence, right? So you can see we're at that confluence. Major support in the euro is right here, right? So you can see it in green. This is it right there. So you were just above that level. Lots of support down here. I would be nervous being short, right? Going into, you know, the weekend right at these levels. Sterling, Dale masterfully said, you know, false breakout, you know, it's going to fail any move up higher. Boom, we're at channel support. You can see it in blue, right? Here's blue. You guys can see it. Oh, wait, hold on. That's for you, Dale. Okay. Aussie dollar. So Aussie can't get out of its own way. We slipped down a trend line of support right there. Dang it, I got to take that off. Brian, I'm really pissed at you right now.
Happy New Year.
I know, like, gosh, dang, I want to put it back on. No, I'm not for the show. Anyway, trend line support. We're at trend line support, 65 cents. Even after great jobs report, stocks at all-time highs, Aussie can't get out of its own way. And copper doing what it's doing. This is the one that would freak me the hell out, especially if I was long some Aussie, but I'm not. But just in case you are, Kiwi 618 retracement long term. We hit it today. We've been looking for, you know, in you know, on the bias chart every day. We're like, okay, 60 cents, 60 cents, 60 cents. It's the only thing that's been bearish on our bias chart. We broke it last night. So, you know, we put this together every day for our ForexAnalytix traders, right? So we broke that. We finally hit 60 cents. Well, now that we're here, you got to be a little careful, right? You know, dollar CAD, we got Canadian retail sales coming up. We're at 136. This is a big, you know, double booby resistance. I mean, two tops. You guys know what I'm talking about. Anyway, doesn't it look like two boobies? Okay. Dollar Swiss continues to rally.
Wow.
We are getting close to the 78% retracement. We have completed the bull flag pattern. And then obviously the dollar yen starting to turn south. So this one, you know, I'm happy that we're starting to see a little bit of a move, but also take a look at the dollar MEX. Banxico, they did start cutting, didn't give us any indication that this is like going to be, you know, they're going to start aggressively cutting or anything. It's pretty much in line, right, Kman? So
Yeah, totally.
Yeah, and I'll let you continue on. Just let me point out that the dollar rand also just hit a 618 retracement inside of its longer term triangle, but it just hit the 618. So a lot of key levels here. Hard to get super excited, but we are, you know, we're you know, it's been a hell of a reversal, being that it was a Fed week, and after the Fed, the dollar got clobbered and came roaring back the next day, and that's probably caught a lot of people off guard as we go into the end of the week. So with that being said, Ryan, we have a few minutes until Canadian data. What are your thoughts going into the end of this week?
Just want to see if these dollar moves that we've seen today follow through, or if we're going to start running out of puff. I'm bidding euro dollar down at 108.05. Doesn't look like I'm going to get filled at the moment. As Kay mentioned, yen's on a bit of a move at the moment. Don't know what's behind that. So we need to keep an eye there. It's in a bit of a bubble at the moment. Dollar yen, it's in its own world at the moment, so I can't really get any clues from that.
Yeah, there you go. Dale may have nailed that one. Yields are moving a little bit here. Yeah, dollar yen. Okay, well, how aggressive are you going to be on a Friday? Are you gonna put it all on black today, Ryan?
Nope, not at all. I've got enough to
Okay.
manage.
Just checking.
Got some dollar mex that I picked up yesterday, 71. That's chugging along. I will keep an eye on dollar China because that's another one
Yes.
just out of
By
left field.
the way, Nick pointed this out in Asia
Wow.
last night. I was away from my computer. I was at a meeting for a parent type of thing. Anyway, you got back and Nick is like, "Did you guys see the CNH? What happened there?"
That's a big breakdown.
Yeah,
No
yeah, big. That was big. I mean,
Wow.
look at that.
Yeah.
Okay. All right. Well,
That is big.
thanks, Ryan. Kman, what do you think? And by the way, what caused this move? Do you think?
No idea, but I think it's just a combination of a higher dollar and I heard Chinese corporates were buying dollar China yesterday, or overnight, sorry. And the rest is dollars. We've broken through the 722, 23 again and acceleration. But for the rest, inexplicable because the PBOC did not add liquidity. They still fixed stubbornly low. They still send out the submarines selling the rally. I don't see any other explanation than those corporates and the dollar trading higher. For the rest, I'm really interested in this move in the yen. It's a bit bizarre. I mean, you can say yields, but they're like 2-3 BPs off. They are back where we were yesterday. So
Yeah.
it's a bit
It's
strange.
not fast enough to be intervention, but it is fast
No.
enough to where you go, huh?
Yeah, I mean, that's the
Right?
thing as well. I was saying in the room several times, I said, it's a bit strange what's happening up around or just below 152. Could be that there's a bit of a submarine thing going on as well. And now we see the rest of the dollars actually coming back quite a bit too, which is a bit counterintuitive if you look at the stock market. So I don't know. I think somebody's or just like big range traders going on and doing their thing because dollar Swiss just lost 20 pips as well. But that one I'm going to keep. I think it's Swiss is in a longer term downtrend.
Yep.
So I still think that's going to continue for as long as we're above 89. Yeah, Euro Swiss 96.75.
Could the market be smelling risk off
Yeah, it
with
could be
yields dropping?
That was my initial
could be risk off,
thought
but then you
process.
don't see typical crosses risk off go higher. Like Euro Aussie, Euro Kiwi are not really higher.
Yeah.
Okay.
Everything is moving together. Cable is also 30 pips higher.
Yeah.
Yeah.
And Euro Sterling tends to move higher on risk aversion, but that just a bit ago, you can see it's pulled back quite a bit. I guess maybe as the fear of the 200 DMA. I don't know. Hey, a couple other things. I should mention this just before this Canadian data comes out. I know you guys have talked a little bit about gold and silver, but gold's vulnerable now. I look at gold, it should have really moved higher and really, I know this move in Asia above 2200 was in Asia, and that already worried me. But we should have.
That was very similar to that prime spike, wasn't it? That move.
Yeah.
What's that?
That one we got over on the left in December.
Yeah. Similar. Yeah. But I wouldn't be worried about it just yet. But man, we started trading below 2140, and I would be really nervous about this move in gold, especially with silver, kind of rolling over here. Anyway, we have Canadian data coming out. Dale, what are your last? I know you're going to have an interview, but any thoughts, trading point of view, going into the end of the week?
Yeah, I
Put
mean,
it all on red.
10-year back under 420 is pretty positive signal for lower yields.
Yeah, I mean, maybe it
is
like
a flag,
And I mean, it might weaken the dollar, and maybe that'll be supportive for, I don't know,
metals, the market. Maybe not the market.
Maybe not the market. Yeah. Maybe traders are buying bonds because they're scared poopless.
Are they buying? Yeah.
Maybe.
So TLT is
okay.
not going to make it to 90 then.
Right. I'm going to put up the dollar Canadian since we do have Canadian retail sales. Let me grab the data flash really quick. You can find it on ForexAnalytix. It's right here.
A little better than expected.
Oh, just came in. Thank you. Sorry, Kman. I didn't mean to step on you there.
Those a little better than expected.
Yeah, retail sales a little bit better. So, all right. Well, we've come off a little bit. Looks like 136 might be off the table, but these are the days on Friday where you go, oh, I don't expect that to happen, and then things start happening. So just always watch your 6 on a Friday. Some pretty key levels in the FX markets have been tested, and S&P continues to grind higher. I know we're weak right now, but like I said, go back to last Friday. We came off last Friday, and then next week we were up and away. So could there be some profit taking into the end of the week? Makes sense, but we're still making higher highs and higher lows, and I think you have to be respectful of what we're seeing here. Anyway, Dale,
I
great.
have to do a little Forex guest hunting right now.
Oh, okay. While you're doing some Forex guest hunting, let me mention to you guys this. We were going to have a special announcement on Forex, or for the ForexAnalytix community this week. We had to push it back a couple of weeks because of technology reasons. It was more of a user interface. Want to make sure that your experience was good. So we think we have all the pieces in play. Problem is we're going into this next week into a holiday week with Easter. Yeah, it's so we're looking at probably about 2 weeks away, and then we'll make our announcement what we're doing here at ForexAnalytix, and hopefully you guys enjoy it, especially moving forward. So I won't give away any more than that, but we're probably set for the next couple of weeks. Just want to make sure, and we're going to just announce it here on Face. So just if you're logged into Face the way you're logged into Face right now, you're gonna hear the announcement just as just like this. So
it's a big deal, guys.
Yeah, I think it's a big deal. I think it's a really, really big deal. So anyway, and it's going to be a big deal for you guys at home and at your office.
Mainly for them
listening in. Yeah. So, all right, Dale.
All right, guys. All right,
thank
team.
you.
Thanks for
Ryan, Kman. Thank you.
Thanks, guys. Have a good weekend.
Thanks,
for
guys.
the week, Dream Team.
And Dale, don't mess with the charts anymore. The magic wand.
And
Ryan, you owe me big time.
I'm addicted.
Woohoo!
Yeah. I tell you, that really, I'm hooked.
It's like a fidget spinner, Dale.
Yeah, I'm no tech. I'm not even low tech. I'm no tech. But we have a great metals guest. James Anderson always has a handle on what's happening in the physical markets. And James, you put up that, welcome back to Face, you put up that chart about a silver coil. Did we break out the upside and then give it back? How are you, buddy?
I'm good. Yeah, that was a couple days ago I sent you. Yeah, that was a chart that shows, it's a long-term chart that basically just shows a huge coiling. Ever since silver ran after COVID up to 30, it's just been coiling.
All right, so we're still in the formation, or did it poke its head out of it first?
No, I didn't get it. Yeah, let me share my screen here.
It's a beautiful symmetrical triangle. Really, textbook.
Let me pull it up here. Give me 1 second.
Good to talk to you again, buddy.
Yeah, it's good to talk to you. It's been pretty exciting in terms of gold and silver. It's all things fundamentally look sound, and now we're actually starting to see some price action follow up on that. So that's always nice.
Even the miners are popping, and they're not giving it back on down days in metal. What do you think of that?
Yeah, in the end, I've always been really bullion first. I think the mining sector has underperformed bullion since 2007 overall. There's been a couple of times, where miners have outperformed bullion in general, but those have been short and brief. And I think that's going to continue for a little longer, at least until we go into a mania phase. And then during the mania phase, you'll see miners really start to reassess themselves. Reassert themselves in terms of performance on a relative basis. But again, that's like throwing a dart at a board. You know, good luck, because some of them won't do anything and some of them will outperform everything. So that's just, you kind of throw gambling cash at that.
Yeah, I
Here's
love that formation. The low happened in COVID, the bottom green line, right around 12.
Yeah.
And then the high up around 30, so that's $18. Looks like a breakout above 27. That gives you $45.
The lines are really not that technical. I just showed you the coiling, the range between the low and the highs, and you can see it's just getting tighter and tighter, and that's generally a sign of a market that's about to break out. And once you get over 26, 28, 30, once you clear 30, that's like the most important number in the medium term, basically. And it's possible by the end of the year that 30 could be threatened. We'll see. We'll see how it goes with the rate cuts and stuff. But yeah, it's got the look of something that's about to blow, and that basing sets up a situation where you could have a run in silver that lasts for a formidable time.
And you know what else I see? I see one drive in 79, another drive in 08, and you know I'm a big believer in the 3-drive formation. So there's one missing, which means we have to take out the high from 2011. Was that it, or 09?
Yeah, you got your, this is, I'm guessing he's got this data based on quarterlies. I'm not sure exactly what he's using, but, the old 1980 high is still the high in the futures market. I think 52 and near 53 was a high. And 2011, it got near 50, but it maybe in futures it got over 50, but it didn't eclipse the 1980 high. And you're talking about a precious commodity that, you can look at virtually any commodity market, and there's nothing that's priced below its 1980 high. And silver has just been, it's been the most suppressed and systemically rigged market, I would argue. And, pretty much you'd have to go back all the way post Civil War era to like the crime of 1873, where silver basically got demonetized. And pretty much from there on in, it's been one era or another of suppression of value in silver. There's been a few pops. I mean, the 70s was one where they let it go. And they came running in January 1980 and said, no more silver longs, halt.
Yeah.
And,
I was in the business then. You must have read about it. You're too
young.
young.
I mean, I've totally read about it. I've done research. I've interviewed people who were covering the markets then. Jeff Christian, a CPM group, basically said the Hunt brothers is a scapegoat, and they only added maybe a few bucks here or there in terms of their actual buying and selling. I mean, they were smart in the beginning. They went physical bullion, and then they got greedy at the end and went levered long and didn't realize that the rules of the COMEX, basically set the system up.
You're right. They changed them.
Yeah,
they changed them to liquidation only.
Yeah, so they didn't understand what game they were playing, and they got taken. So, but this is a different game. This is not, one group of guys that you can scapegoat. This is we're talking on a sovereign level here. So we're going to go through some slides to kind of understand the bigger picture. I know that most of your guys who are on these calls are more short-term orientated, but I'd like to take the long-term view so you understand what secular bull market you're sitting in and which secular bear market you're experiencing. This is just simply long-term bonds. And basically in the last few years, you have central banks by their actions showing you what they're doing, which is buying bullion over bonds. You have the largest amount of official gold bullion buying on record the last 2 years. It's mostly gone east. It's mostly gone, I would say, China probably. And then there are some Eastern nations in the EU, for instance. Poland's been buying, Czech Republic's been buying. So you have a situation now where governments are obviously moving toward bullion over bonds and diversifying in their sovereign savings. Let's see. One other
point. Poland might be worried about Russia, and also worried about the fact that the U.S. is dropping the ball there and they're next.
Yeah, I mean, Poland, if you look at the way that they've acted in the last 5-10 years, they're going to be threatening Germany in terms of a manufacturing powerhouse in the coming decades. I mean, they've done a lot
I read about it being an economic miracle.
Yeah, Poland has reindustrialized, and they're going to become a major power in the EU in the coming years.
Interesting.
I would expect. It wouldn't surprise me to see them rival Germany in terms of manufacturing base.
Should we buy some zlotny? Huh?
Well, you
How
can buy
about some
gold.
pierogies? Pierogies for Easter.
You know, what's funny is that their gold buying in that country is pretty strong, and just anecdotally looking at some of the surveys there, the young kids are buying gold there as well in high volume. I think a lot of them are taking cue from the government and their leaders that buying gold makes sense. And in the EU, you have zero VAT there, so it makes sense that they would be buying gold versus silver, which has I think it's 21% VAT added on, which is kind of prohibitive for any investment.
Wow. Why would they put the VAT on silver?
So the EU wants control of their citizens, and they don't like people having too many sovereign savings. And you know, the idea that spit on silver and call it a commodity and put a 21% VAT is handy in doing that. I mean, the gold thing, they never got around being able to put VAT on gold at least. So people in the EU can buy gold without taxes, which is nice. A lot of those countries too, you can sell the gold without capital gains, depending on the type of bullion you own. But not so much in silver. If you live in the EU and silver, you're better off probably holding it offshore in a non-bank vault. Secondly, you could maybe get it in a closed-end fund like a PSLV or something like that.
Okay. I didn't know that. See, I always learn from you.
So this is
physical market better than anyone I know.
So the physical one, yeah, like I mean, look, I just saw yesterday Wisdom Tree, the European silver ETF.
Oh, I heard about that.
Yeah, SIVR added almost 30 million ounces out of nowhere. So there's obviously capital flows in silver in Europe going into ETFs. SIVR is just another unsecured silver ETF. I think it's not as big as SLV, but it's another one of those funds that you basically put your capital in to get short-term price exposure to silver. I think if you read the prospectus of any of those ETFs, you're going to quickly realize you don't own a single ounce of the stuff. You're an unsecured creditor. And basically what you own is an underperforming derivative that tries to track the spot price of silver or gold, what have you.
Yeah. So,
I mean, it's something for a short-term trade, maybe medium term if you can stomach risk. But ETFs, I think, were systemically set up for what's been happening in the gold market really of late, and silver market as well, which is essentially to have a slush fund to pull out bullion bars in order to move it across the world and basically use your shareholders as the product. I mean, basically, if you're buying an ETF, you're the product. That's generally how it works. And the underlying bullion that's supposed to be backs this stuff, the APs of those ETFs will use that bullion at certain times to profit and take advantage of premiums.
You think Larry Fink is doing that with the Bitcoin ETFs?
Of course. I mean, these people are all the same. I mean, in the end, they're driven by profit. You know, so where's the profit? Go look there. Okay. Here we are with the 10-year bonds. It's a bond bear market. I don't understand why anybody would think otherwise. You see the drawdowns happening here. And the blue line is the UK in the 70s. And I think the United States is going to mirror a lot in terms of what the UK went through in the 70s with massive inflation coming from the United States as well. Being the reserve currency that's slowly losing that status as time goes on, we'll probably end up in a situation in the world where the dollar will still be important, but it won't be as strong as it once was. I mean, we've run through a secular US dollar bond market, a bull market for what seems almost, I don't know, I have to go back and look, but the bottom, I think, was 2008. So it's been 15 years, and you have gold in a relatively strong dollar environment, you know, breaking through to new all-time highs.
Great point.
What happens?
Showed that this morning. And normally equities sell off with a strong dollar. They haven't either.
Yeah, so what happens in a bond bear market that lasts for a decade plus? You know, what does gold do? I mean, that's the question, and that's the time that you're probably looking at, you know, in the coming years, because I mean, fundamentally, the dollar. You just look at the deficits of the government. I mean, it's every 100 days they're adding $1 trillion to the deficit. I mean, that type of stuff at some point is going to have a real problem in terms of relative value for the dollar.
confidence.
Let's move on. This one.
What they say about confidence, it's gone when people realize the con.
Yeah, and once you see it, you can't unsee it. That's the thing. It's just.
I've had a few of those incidents.
So I was looking at this chart earlier. I mean, this is just your longest term gold chart. It basically goes back well before the United States was even founded. But the flat line under there is the $20.67 fixed price that we had in gold for a long, long time in the United States. I mean, the majority of United States history, the price of gold was $20.67.
Right.
It's only been really since, I mean, there was a blip there in the greenback area during the Civil War.
I see it.
Where gold went crazy because of all the amount of issuance of greenbacks that were out there, and we had this huge panic in Black Friday on Wall Street. But that was one time where basically gold longs in the derivative market won acutely for a long run. We had that happen in the 70s, and we had it happen in the 2000s, and it's starting again, where gold longs are going to be consistent winners.
Yeah, you know, this could be, you look at this, it's so long term.
Yeah.
And we've already had a couple of waves, you know, maybe we're in the third wave here. And you know what they always say, the biggest gains happen at the end.
Yeah, like 90% of the move happens in the last 10% of the time. Yeah. Of course. Yeah, I mean, it eventually, like, who used to say it? It's the guy that all the conservatives hate. He's a trader who took on the Bank of England. I forget his name.
Oh, Soros.
Yeah, so George Soros in like 2010 or so, or 9, came out and basically said gold is the ultimate bubble. And at the time, he was referring to the fact that it's going to be the final bubble of this entire post-World War II debt supercycle. But he didn't clarify that when he said it. He said it, and basically anyone listening started freaking out and calling me on the phone and being like, Soros says it's a bubble. And, you know, it's like, it's insane, like to try and explain that to a retail investor over a phone and when they're emotional, you know. So
isn't it fun to deal? Isn't it fun to deal with it, to have clients?
It's always fun dealing with people who have not been financially educated by design. Yeah, that's always fun.
You do. I guarantee you they learn from you.
No, they do. That's a large part of my basically a lot of my job is to educate people on my view, and you know, if they do their due diligence and find it a Kim, and maybe they follow my lead. But that's my job essentially.
How's life in the mountains in Panama?
It's good. Everything is good. It's luckily, you know, there's been no strikes of late, no political issues going on, and everything's fine. Goods and services are flowing fine. The dollar's doing just fine. It's been a good place to live the last 5 years. You know, for me, when I look at this place, it's a place that I wouldn't hesitate to retire in. I mean, I can see why so many boomers came and moved here to retire, because it's rather nice. Yeah,
you'll be away from all the chaos.
Totally,
and politically this fall.
Yeah, and you don't have the problem with currencies. Like, for instance, Costa Rica is overpriced. You know, I mean, Colombia is dangerous. Here, it's pretty idyllic. That's basically the way I describe it. If someone comes here, it kind of feels like you moved back in time into like the 1990s or 1980s, in terms of 1970s almost, in terms of the way the family structures are and the way that people behave. But you also have your technological gadgets from 2024. So pretty much everything you need to do business is there. But in terms of the way the culture works and the way that people act, it's a lot more respectful.
So much hatred here between people.
Yeah, luckily we don't have to deal with much of that. I mean, they have their own issues here. Don't get me wrong. I just don't get in the middle of them. You know, I stand outside.
James is in the mountains, Charles. You're in the mountains,
so we're looking,
bro.
Yeah, so the North Highlands in Panama. So there's an area called Buquete, about a mile high, and right behind us is a volcano. I'm not even going to start to tell you what happened the last time the volcano went off. It was you didn't want to be here, so I'll always be ready to leave at any point if there's an earthquake and a volcano.
So so there is always something, isn't there?
Yeah, of course. No place is risky. Nothing.
Where's paradise, bro?
It's active.
You know, just build a house, stack bricks,
It's
and
after
build
this.
our house.
It's
Go
after
ahead.
this lifelong test we're under. I promise you that. All right, so
All right.
we're going to look at a long-term silver chart here.
Like it.
This
Yeah.
is a similar,
Yeah.
span of time that we looked at the gold one. You know how I mentioned the crime of 1873, and you can kind of see that in the line after the Civil War pop.
What was the crime? What was the crime?
So the crime of 1873, which is about right here. Where is 1873?
What was that guy's name? He wanted to go to a silver stand.
Yeah, that's the I forget the guy's name. He ran for presidency in like the late 1800s. It's going to slip my mind, but I mean that's what the Wizard of Oz is written about. I mean, if you go and read the original Wizard of Oz, the slippers were made of silver. You know, the all the different characters, the Tin Man and the Scarecrow. They were all, that's the farmer, the manufacturing base, all the people who were workers in the late 1800s. Who basically got screwed when the
Bryant, William James Bryant.
You got it, William Jennings Bryant. That's it.
Jennings, all right.
Yeah, I will not be crucified on a cross of gold. Right, that speech.
Yeah. Oh, wow.
So they basically demonetized silver because the Northeast bankers were in cahoots with the English and the English bankers, and so when you demonetize silver, basically all the debts had to be paid back in gold, and the Westerners out there had a lot of silver, but not so much gold at the time. And so it's basically a consolidation of the Western United States at the time. So that basically that box there that you see is that era. I mean, basically anybody who moved out west and who had debt ended up selling their assets for pennies on the dollar, to large conglomerates. So it's just another example of the way that the financial system often shears people in short durations. This is a long duration, but the further we move in time, the faster those things happen. I mean, basically, just for instance, the COVID era was another example of certain shearing. There were winners and losers, and there were big losers. I'm talking about people losing their lifetime savings. And then there was other people pilfering the treasury and getting away with it. So that happened over a few years time span, and we're looking at something that happened over decades of time spans. So things are happening in a faster way, but they are rhyming in certain ways. So when we look out at silver, we're looking at an era where the price was basically controlled in various edicts and mandates from the government and the demonetization. But as soon as we went free floating US dollar, silver took off, and so you can see what happened after that basically occurred. I mean, silver
business then. That's
exactly.
Volcker came in too.
Right, and so silver shot basically from like $1.29 or so up to $50. So I don't know, 38-fold or so from bottom to top. Yeah. And we already discussed how the COMEX longs were basically, you weren't allowed to go long by January 21st, 1980. They basically changed the rules so that they could stop that market from going. Because at the time, the US dollar was literally was threatened to be ruined by gold and silver exploding so high. I mean, gold was priced so high in 1980, 81, 82 that the amount of official gold reserves the United States had, the value of it was larger than the amount of currency that was out in supply. So basically, we could have gone back on a gold standard had we so chosen at the time.
But it peaked on the doesn't history rhyme? The Russian invasion of Afghanistan.
Yeah, Afghanistan.
They lost too.
Yep.
We didn't learn from their lesson.
And here again, we've got the the 2000. Let's just move over to that real quick. The 2000 to 2011 run, basically running from whatever that is, like just over $4 to 50. And that was, I would argue, the first leg of this 21st century secular bull market that's happened in silver. Obviously, 2011 to 2019 was awful, but the pop that happened from COVID. That's still, that energy is still being stored. It's still coiling, as we discussed.
You're right.
And that's going to have to play out at some point. I just don't know exactly when, obviously, but it's getting closer and closer each one of these bars we set up. And when bars are getting from wide and long to short and coiling, that tells you that energy is being stored and something's about to explode.
You're a hell of a technician too.
Well, I would tell you I'm pretty good technically at looking at long-term charts. I don't really do the short term as much because I'm just not a huge short term speculator. I can do a few trades here and there.
Well, it's less pressure too.
Yeah, that's true. I would do it perhaps.
You don't seem like a guy that likes a lot of pressure.
I don't like to lose my money. I'll tell you that.
Okay. Yeah.
That's one thing.
We're getting one question from Sean, and then people also want to know how to find you. Do you have views on platinum and palladium?
Yeah, Palladium already kind of did its run. You could tell that was going to happen because they rated Palladium ETFs before, and NYMEX got rated, and all of a sudden there was a shortage, and it simultaneously hit the same time as that Volkswagen diesel scandal. So all these companies stopped using platinum in their manufacturing and switched to Palladium at the same time when it just wasn't that much. So you had Palladium run from about 600 below to 3,000. So that was a pretty good run, and now it's down toward 1,000. Platinum and Palladium are going to meet pretty soon, and generally, historically, platinum should be more expensive than Palladium for various reasons. But
gold historically.
Of course, the idea that Palladium was much more expensive than gold, like twice almost as expensive as gold, is pretty ludicrous.
Crazy.
That's how I'm saying.
Yeah.
So
I remember platinum trading at $2,000 premium to gold.
Yeah, it got double the price of gold in 2007-8, I believe. It got to like 2,300 or so, and at certain points, it almost got double the price out of gold. Historically speaking, I mean, platinum and palladium meeting 1-to-1 is a pretty common ratio, and I think in the future, after gold's done its full market mania, that probably happens again, because platinum is, once you study it in terms of what it's used for and what it could potentially be used for, I still think we're kind of cavemen in terms of what it's going to be applied to in the future in terms of electronic applications and other things that we're going to use to go interstellar. We're going to need platinum for sure, and there's just not that much of it. It's
So do you buy it? Are people buying?
I think platinum is a minor portion of someone's bullion portfolio. I have some platinum because I just think at $800 or $900 or whatever I got it at, it's just cheap if you look at a decade or two from now. And so it's one of those things you buy it, forget it, and just put it way back in the safe or whatever, and you just don't think about it. And once it starts really moving, then you bring it back to market and sell it. I mean, it's a pretty simple trade, but it's a long-term one. It's not something that can look to happen in the next year or two.
And a long-term target on the gold-silver ratio.
The gold-silver ratio has dipped to the low 30s in 2011. Is, I think, a conservative target ultimately before this coming bull market mania phase pays out. So to see gold-silver ratio fall back in the 20s would not surprise me at all. It's possible that it could go lower than that, but in the 20s, I think it's something that is imminent. The question of course, when it could be in the 2030s when that happens. It could take that long because there's just going to be a hell of a lot of interventions like there already has been. And so it's taking longer than it should have. But this is basically what's setting up. There's absolutely no way that 2011 was the blow off top for bullion. The blow off top for bullion is a different world. We're basically moving into a different world. And that's the sign that you're doing it. 2011 was just the beginning. I mean, that was just kind of the entree before the main course.
An interesting man, James Henry Anderson.
So
stay thirsty, my friend. Stay hungry and thirsty, James.
You kind of look like that guy, Dale. I think.
Yeah, I know. I should be on camera. Anyway, buddy, it's always great talking to you. I always learn. And so you could find him on X at James Henry and your website, bro, and your YouTube channel.
Sure. We're SCBullion.com. We're a top 5 retailer of high volume sales in gold and silver in the United States. And the Twitter handle is at James Henry and.
And what's that a picture of?
Oh, that's just a background. I'm sure that's somewhere in the Pacific out west in the United States.
Okay. Nice.
There's a couple more charts, a couple more for you guys to remember. I just brought these last two up for.
Okay. Yeah.
I saw a chart recently explaining that, gold in terms of the S&P 500 is as cheap now as it was when President Nixon went full fiat petrodollar in 1971. And I double checked the notes, and that's true. It's basically it's right in line. And if you look at the formation of that hill that we've recently built, it looks a lot like the one from back then, you know, where it's slowly starting to roll over. So yeah, ultimately, look at the conservative target of 2011 low, which is about 0.7. That is, we're going back to 1-to-1 S&P gold. That's going to happen.
Where do you think they'll cross at 3,000, 5,000?
That's a really good question. I would imagine higher nominally, because the way that the system's set up.
Oh yeah.
The powers that be have to nominally make this S&P 500 look good.
20,000.
I mean, 7,000, 8,000 maybe. You know.
Okay. All right.
But that's out here later on in this decade where it goes back toward 1. You know, somewhere in this area where this thing rolls over. But when it rolls, right? So you have to be positioned. You don't want to be late in that position. And it's a similar story on the Dow. I mean, the Dow is a terrible way to track the stock market because it's a cherry-picked, you know, major stocks. But this even goes back further in the 1800s, and you can see it's a similar formation.
Thank you, Notre Anderson.
Yeah, you're welcome.
I'm glad when I get you to laugh. All right, follow James. We're entering this. We're in the 4th turning, so you know, get ready, and physical metal is part of it. Thank you very much, James. I'll talk to you June-ish.
All right, buddy. Good talking to you.
All right, bro. James Henry Anderson at James Henry and do your buying of physical through him. He'll give you good advice. And that's a wrap for me for the week. Made it through another week with migraines, and you know, keep a good thought for me. I'm tired of them. And I'll see everyone on Monday. Have a great weekend. NCAA tournament, great action. And you action junkies, make your plans on Saturday for what you're going to do on Wednesday. And that's a wrap. Don't just count your pips, count your blessings. See everyone down the road. And you too, James. Thanks again, buddy.